Hello, hello, hello. Welcome everyone. So let's get straight to it. The date today is the 28th of May on a Sunday. Um, so we need to actually see how our last week analysis went. And we actually called all these moves to a T. Yes, we had a dynamic approach. Yes, we were versatile and said that if it comes in a certain area, we can see it pushing up. But let's see actually what I said last week. This was 6 days ago. Let's see what we
4 hour
said.
rejection and 4 hour fails to break below this area, I am looking for buyers simply because all my time frames align with each other.
We said if we get 4 hour rejections here at 171.500 and we cannot fail to break below we fail to break below this area, we're looking for buyers. And guess what happened? 171.500, 4 hour could not break. So what you had to do was go back and let's just see what happens. Let's just say we were here and price let's say you missed Monday's entry because Monday we rejected and we pumped right to the upside and we saw closures below, and maybe your TP could have been 172.500, which is your next quarterly psychological level. But let's just say you missed that entry. What you could do is see this nice 4 hour rejection, and you have to see when price came into this area, we had huge engulfing, huge engulfing. So we have to be fast and sharp here now. After I've seen this, I'm expecting some huge engulfing simply because past data tells us that we like to move fast off this area. And not only did we just have a wick rejection, the body closed above this body, and above this body. This tells me the bodies are making higher lows. So there's another indication to start looking for sales. I need to go on the 30-minute time frame, and you could have potentially taken out this entry here. I believe I did not take that entry, which I remember there was a few dojis, and then I took my entry. Yeah, I took it after the break of this. Yeah, we had an entry here. We had an entry here, and I did say if you go back to my last YouTube video, I see price heading into 175 or 174 areas. I think my stops were here. You could have done this. You could have had your stops here and just taken your TPs into 172.500. That would have been a great short-term approach. But if you're looking to hold this long-term, you could have maybe kept your stops a bit wider to give price more breathing room, and you could have had your take profit into 174, around 175, 174. Let's just say that that's a nice 1 to 7 risk to reward. And if you see, price was very volatile. So what happened was, I think I put my stop loss to break even. Okay, this is where I have to put my stop to break even. Let's just go a bit back. Here, when I saw this candle here, huge closures above all these bodies, all these highs, time to I put my stop loss to break even, right? And that's part of my trading plan. I was up around 2%, and you saw this huge wick, and look what happened. Boom. Got taken out at break even. When I see PA like this, I stay away from the market. Yes, I'm still bullish. Yes, we're still forming higher highs and higher lows, but I'm staying away from the market. This is very volatile. It's also the final week of the month, so we can see lots of manipulations. When I saw this candle, I want to stay away. This is not really aligning with my strategy, and my strategy doesn't go well when PA is like this. So what I want to do is stay away. But as you can see, price still continued to go in my direction, and our bias was correct for this week. So that's great. But we got taken out at break even, which is fine. We move on to next week. And for next week, what do I see? Actually, we'll come on to the analysis. Let's go to gold. What did we say for gold? If we go back to our week, we said what did we say?
Actually, but yeah, potentially you could see rejection, 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 rejections, 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 rejections. So maybe we can see price come back down here and push up and then continue to the downside, or or price may break, retest,
And drop. Okay, so that was two scenarios, right? And even this one was valid as well. Push down here, come back up here to give us a bigger pullback before the big drop. But we have to be dynamic. I've always told you that's my weekly outlook. But as we get more information, sometimes our analysis will adjust, right? So what did we see? We actually caught this trade here. And there's a 1 to 6.25, 625, and this was our TP. As it was the end of the week, I did close my trade around here and took around 2% of the market. But let's see. Let's see what happened. As you can see, when price was in this area, we had one bearish engulfing. We came back into this area and we rejected 3 times. Maybe you don't want to take that entry because you don't like these wicks to the downside. But when you see this hourly candle close below the previous 2 wicks, you can take an entry. Maybe you missed that entry, but price came right back up. And a lot of people would be scared and hesitant. Let's just say you saw this. Nope, you saw this. When you see that, don't be afraid and think, oh, we're going up now. It's looking very bullish. We're still below our zone. We had huge wicks. We rushed into this area and we engulfed. We came, we consolidated, we dropped. If we get another rejection, this is your chance to get a aggressive entry at your zone. Why? Because we were struggling to break below this area, and even when we had momentum on our side, we still couldn't break this area. And look what happened. We had that nice to other people, this is a weak entry candle. But based off everything I've said, this huge wick left to the upside when momentum paused, when buyers tried to get above this area, we engulfed, and then we rejected again. And now momentum rushed back into this area again, and we still rejected. For me, that's a valid entry. That's a valid entry. And you could take an aggressive stop loss, or you can put it above this high right here. And for me, you can take your TP at your next area of resistance support. That's the highest probability take profit as of right now, right? That's your highest probability. Your next highest probability would be down here, and the lowest obviously is there. The further away your take profit is away from your entry, the lower the probability will hit, of course. So you could have taken a nice entry there, and as you can see, it was perfect for a 1 through 3.72, and we rejected this area. So when I saw these rejections, I was thinking, all right, cool, maybe what we said could happen. We could go all the way back up there, or we need to be wary of this area here. If you go on the 3-day time frame, you can see price closed below this area at the end of the 3 days. Even on the daily time frame, yes, we had a wick to the downside, but we're still forming lower highs and lower lows, and we're struggling to break this area, and we're maintaining below 1984.418. So when price came, what did we see? I also saw a nice 4-hour rejection. But you have to look to this left. What happened on the left? How did I get this zone? A lot of people would have put their zone here, which is fine, which is valid, but I put mine here. Let me explain why. Firstly, when price was consolidating here, where did momentum come in? Boom. We broke this area of consolidation with this candle here. And these highs could not be broken. We couldn't break 204, or even let's just say this area here. We couldn't break 209 here. What candle enabled us to break these highs? Right here. We saw price tap into this zone, and that gave us the momentum to push up. So I'm very, very wary of this area. And when I saw the 4-hour wick into this area, and I saw the way price reacted here, I'm thinking, okay, cool. If we're rejecting this area here, and also it's a previous area of resistance, I'm looking for sales. And that's when I looked on the hourly 30-minute time frame, and I saw this engulfing, and I got in for an entry. My TPs were down. My TP was down here for a huge risk to reward trade for around 6.5, and we came around here. But because it was Friday, I closed my trade around here just because I wanted to start the new week with a fresh mind and complete clarity, not worrying about the previous week's trade. Sometimes I do hold it over the weekend, but currently right now I'm doing an FTMO challenge, so I just wanted to take profits and yeah, get this 200k account. Boom. That's what happened. Perfect. And if you go on Gbpjpy AUD, I don't think I did analysis last week, but we can clearly see on the weekly time frame we're bullish, we're rejecting the previous area of resistance. The 3-day time frame, we had an engulfing, we're forming higher highs and higher lows. We had this huge wick to the downside before momentum kicked in. We can also see on the daily time frame we're rejecting this previous area or structural point. On the daily time frame, we had this engulfing, we pulled back, we had a wick, and I believe I got in on this 4-hour rejection right here where we closed above the previous highs and above these bodies of 1.87. I put my stops just below this zone right here, just in case we do come back to revisit. As you can see, there was lots of manipulations. We had these low, we wicked through. We wicked below this low, so definitely we could have come back in again, and I'm not sure how price is going to react, so I want to be safe and put my stop losses in an area where price proves me wrong, where my trade is incorrect and invalid. That's where your stop losses have to be. And as you can see, we pumped all the way up, and my TP was at 1.9. I believe we will go there. I believe if we manage to maintain above this area as we are now, I can look for buys into 1.9, 1.901, somewhere around that area. Adjust this down there, yeah. That is what GA is looking like right now, but that's what's happened in the previous week. Let's make this a separate video, and we can come back in our next video and do our new weekly outlook. Just any other educational purpose videos. I was actually, when price came here, right? I want to show you a mistake I made. For me, as part of my strategy, I value 172.500 as a key psychological level, a key quarterly level. And we can see when price came into this area, in hindsight now it looks like a bad trade, but I believe it's an error and something you need to hold yourself accountable for. I saw this area right here. And when price, let's remove all this. Let's just say I never had this up right here, right? And we can see we're bullish on all time frames, right? The daily's closed above. We look bullish. We're closed above these bodies, right? On the 4-hour time frame, I could see these wicks right here, and this was one of my zones. I wouldn't say it's a bad trade because we are going with our bias, but in hindsight now it does look like a bad trade because we were below 172.500, and ideally we should have waited for a break and a retest. But again, this was a bit more of an aggressive entry. When price wicked into this area, we dropped. When price came into this area, we came back below and we melted. So when I saw a 4-hour wick rejections, daily closures above this zone, I was bullish and I took some buys. I think my stop losses were below this wick, and I had a TP of, yeah, I think I entered after this candle. We had huge rejections. So in hindsight, it does look, I don't think it was a bad trade, but just a lesson would be that wait for this area to be broken. We didn't break it previously. It's also a nice round psychological level of 172.500. Wait for the break and retest of that, and then you can start looking for sales. But let's just say, let's just say you did take this trade and it's cool. You're in profit right now. You entered around here. Your stops are there. It's looking good. But you also need to be dynamic. If you see where I think I woke up a little bit late. I woke up around 10 a.m. the next day. I missed this candle. If you see rejection, close your trade. We melted down into 171.500. We closed below once, we closed below twice. There's a higher probability we're going to drop and hit the stop loss. Close your trade, right? And it's fine. Don't think, oh, I'll close my trade. What if it hits my TP? Even if you close your trade, now you're going to be like, all right, cool. Because it's even rejecting now, I'm going to wait for a break and retest and then look for bias to the upside. You need to be dynamic. The market is going to do its thing. You just need to be calm, relaxed, and focused and see exactly what's going on in this market. It's got plenty of opportunities. So don't worry about, oh, if I close my trade and wait for it hits my TP. Stay calm. Have a different approach. Don't have the approach of the 98% of other traders out there. Don't think, oh, if I close my trade, it hits my TP. No. If I do close my trade and it does go towards my TP, I'm still going to try to get in. But this time, based off the new data I've received, this new data of 4-hour rejections and us struggling to close above 172.500, I'm going to wait for a break and retest, and I need price to maintain above this area. I'll put my stop losses down here somewhere where if price does hit that stop loss, my trade is incorrect. Then I'm following my plan and I have a plan behind my entry. I'm not just entering for the sake of getting in. Yeah, so that's all from me. Stay tuned for the next video because we will do our weekly analysis for the coming week, the first week of June. Let's go. Thank you very much. Please like and subscribe, and please leave your comments down below if you have any questions at all. Let's go.